when you open up a delta profile, okay, and this is a toss with delta and the bid and ask. So I forget which one is which, but it doesn't really matter. So this is a toss with the delta profile. Okay, you could use deep charts, motive wave, doesn't really matter. Let me take a sip of water. Okay, when you use this, you notice something, or you should. Aggression gets bundled up. Okay, and let me actually pull out my drawing tool. Okay, this is bundle of aggression. Let me favorite this. This is a bundle of aggression. This is a bundle of aggression. This is what I consider a significant delta level or a significant delta zone. It's usually a zone. So SDZ, let's just call it that. There we go, new term. Okay. Why is this so powerful when trading? Okay, let's go back to the same scenario where you get super FOMO and you're trying to catch the bottom. Usually, maybe there's a higher time frame fair value gap. I'm not really sure, but your stop loss isn't likely going to be here. It's going to be, swing high anywhere. Let's just say it's right there. Why is that kind of a dumb stop loss, right? Because the buyers are positioned right here. We don't know if they're still in their position. We don't know what they're doing. We just know that buyers are at the top and buyers are at the top here. They may not still be there, okay? But let's just say they are. This is where they're entered. And sellers are at the bottom. And there's a lot of sellers at the bottom. Okay? Now let's go back right there. If we put our stop loss, okay, here, right here at this fair value gap, this little one right here. Why? Why would we ever do that? Oh, well, maybe it could retest or no. No, this is really dumb because there's not really any significance up here. And the only significance, SDZ, that sounds too close to STD. Okay, well, SDZ, let's just call it that. The significant delta zone is up here. Once we start trading up here, these sellers are absorbed. This trade, the short, is invalid pretty much 9 times out of 10. Okay, we might retest the absorption, but for this many sellers to be fully absorbed, that's a really bad sign for longs. And I no longer want to be in that trade. And honestly, because I hate drawdown and I love high RR with still high win rate, by the way, would put my stop loss like between here or here. Why? These sellers, I want them to defend their position with their life. Okay, we're super short. The buyers are up here. I don't want to see buyers be rewarded in any way because why would I want to go short when there's a long setup for me? Okay, maybe it's not a key level, but I don't want to short into absorption. So my stop loss is going to be very tight. Let's just say right here. Why why is this such a good thing? Because we almost double. I mean, you take your stop loss from anywhere in here to here. Again, you're double, tripling, quadrupling RR while still keeping the trade invalid at a certain. Okay, I don't know how to explain this, but if we reach this price level, we are very likely to reach up here. Okay, why does it matter? If we reach this price level, we're going to reach up here because knowing that, it's just unnecessary risk to carry that. Having your stop loss at swing high or candles it's just dumb because unless there's a lot of aggression bundled up there, like yeah, if you short right here, the stop loss would make sense like having it in this area because that's where buyers would be rewarded. Okay, or like longing right here. I wouldn't say long right there because you're trading basically nothing, but your stop loss could be near the wick or near the bottom because that's where they're positioned. Okay, but when you see something like this is a great opportunity because now when people who don't trade order flow, they're gonna see your trade and you're gonna have your stop loss like this, and they're like, wow, you got lucky, but you didn't. You knew your stop loss was actually protected and not protected by a 5-minute fair value gap or 50. No, none of this like protected lingo that ICT traders like to throw around. They don't know if their stop loss is actually protected. This stop loss is protected, okay, by large institutional. Well, not really. Maybe there's big trades in it. Okay, I assume institutional, and I'll tell you in a second. Orders. This is significant delta. Again, SDZ. Let's just call it that. If we start trading above it, which we attempt to, buyers right here, look, large buying aggression, but they fail. They hit a brick wall because we're actually protected. This is true protection. Okay, and you can see, I didn't even know this. I didn't even know this was here. Sorry, that's what I meant to say. 109 sell contracts stepped right in to defend it. And they did it again right here. See, buyers made like a P-shaped delta, almost. They're getting aggressive up here, but they fail. Okay? If they start squeezing above it, they're going to run this all up. So why risk it? Why even put your stop loss anywhere but here? Or maybe here, because they might retest absorption, but at this point, again, I don't want to be in it. Because how much delta, how much aggression, how much institutional ordering would be needed to get above this? A lot. This is clearly a huge impulsive selling move. It's strong, it's powerful. Okay? If it gets trapped underwater, now they're forced to exit their positions or scale out. They're forced to do something that will make it, cascade in the other direction, which is not good. And then once these sellers are underwater, these are back in profit, maybe they add to it, and then it's just going to run all the way up. So this is how you keep this tight stop loss. And look at how far it goes. I mean, like FOMO is really bad, but when you um, you know, have your trades like this, it's a lot easier to flip it in a good way. Like if you take a short right here off this, not I would never trade this by the way, but just off absorption. Okay. No one should and no one does just trade an absorption because that's not an entry model. Okay. Your stop loss won't be, at the top of this fair value gap. You don't want to see it mitigated. You don't want to see this, oh, but we might retap into it and move. No, because the SDZ, I don't like calling it that, but the significant delta zone, this is where the sellers, I mean, the aggression is bundled, not up here. If buyers take us up here, they're going to just run it higher. Okay. If you short from right here, let's see, right here, your stop loss should be where, look at this selling. Look, iceberg, almost clearly. Look at this selling abundance. There's no reason to have it all the way up here because for this seller to be trapped, look at here. We didn't get higher. Good. That's what we want to see. Right here, we didn't go higher. Good. Short, short, short. This one, we didn't go higher. Good. This one, we started to get higher. It's not that significant. Like it's not that many contracts. 175 compared to what's 486. You know what I'm saying? 240 or whatever that says. 596. If we trap 596 sell orders, okay, that just trap these buy orders, if we start moving higher, it's all gonna get squeezed and we're just gonna run it. Especially if we get above here. I know I'm kind of repeating the same thing, right? But it's true, and you could see it in trade. Like it's the little stuff that adds up. Okay, if you short right here, I'm just saying. Again, I don't know what you'd be trading, but stop loss, you could easily move it from here to right there. Because look at that. That's where the delta is. That's the decision point. You could give it a point or two, but this is just unnecessary, completely unnecessary. What did I just do? Okay, right here, boom, boom, boom. I mean, once you start looking at trading like this and delta like this, it becomes a no-brainer that these stop losses that people preach at swing highs and all this, it's just dumb. It's just dumb. You know, you'll get the wick out eventually. Like right here, if you have your stop loss above, it doesn't work perfectly. If you have your stop loss right here, it would be brutal, but you're very likely to get broken even, or if you didn't take your profits. Uh, but look at they perfectly defended it. We didn't get really we kind of traded above it, but they sucked price right back down. They were able to not allow a close above it or like any significant like, rally up above it. And that oftentimes happens, and that's a risk you need to take. Oh, look at that. Like, you see this? You see that little delta outlier right here? Right here and right here? See, seller got trapped. Seller trapped right here. Big buyer's position right here. Okay? Even though, like, the low volume node is right here, okay? The delta's right here. And we shouldn't have our stop loss all the way down here. It could be right here. That's how I frame it. Oh my, it just keeps getting better. Like, this is funny. Long right here? Okay? Now, let's just say you're late to it. Where should stop loss be? Okay, this is a little quiz. Here, swing high, swing low? No. Right there. Okay, we want them to defend it and take it higher. This is the SDZ. I might give it a different name. Maybe there's already a name, like a delta node or something. But yeah, that's how you should